Dang. I have a test at 10 o'clock. I actually don't know. It could be at 11, but our class starts at 10. No. 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 No, this is not what we want. I don't think he posted a list of the ratios. Well, I think he posted. Come on. I thought I downloaded it already. Stop. No, I didn't. I thought I already looked at this, though. Nope, I didn't. I thought I did. Oh, actually, I think we looked at it in class. He showed us the document in class. That's why. But all I'm looking for is a list of ratios. I thought he was going to give us a list of ratios, but I guess he did. So, yay. It's probably useless. Okay. Do we need to study this? I mean, I would study if I had time, but I don't really have time. So... I just want the list of ratios. Just give it me the list of ratios. Okay. No, there's no list of ratios. They're just talking about them. So yeah, there's no list. I have to make my own list. That's the first thing I'm gonna do. Is make a list or look at the ratios in the book instead of writing it down, because it's gonna take too long to write it. I could take pictures with my phone and then print it. No. And this is only from chapter 6 and 7, I guess. I find this weird thing that they do. They have two different ratios that are very similar. So basically, there's days sales in receivables, and then accounts receivable turnover in days. They're the same ratio, except days sales and receivables uses gross receivables, and then accounts receivable turnover in days uses average gross receivables. And also, there's a weird thing that they do where they use gross receivables. They don't actually use net receivables. So, okay, they use gross receivables. That's the weird thing. First weird thing. Second weird thing. For one, they use gross receivables. For another, they use average gross receivables. And then we have days sales and inventory. Same thing. Any weird other stuff. Operating cycle is accounts receivable turnover in days plus the inventory turnover in days. Okay. And then here's maybe the reason why I got that one quick question wrong. But how could we have possibly known that we were supposed to use this equation? How were we supposed to know? Because what I was taught up to that point was that you did cash minus inventory divided by current liabilities. But what our textbook says is, use this more conservative formula. Cash equivalents plus marketable securities. Oh wait, I'm stupid. Not cash minus liabilities. I meant did I accidentally add up all assets instead of adding up just the current assets? Is that what I did? Let me see. And by the way, my professor did not respond when I asked him to help me with those two questions. So great. Great. Did I accidentally include a long-term liability? Oh, I didn't. That's hilarious. I added every single liability. Are they like, oh no, actually use the textbook one. The textbook one is actually cash equivalents plus marketable securities plus net receivables, which was 39,000. Don't include prepaid expenses or inventory, obviously. But the reason why I got it wrong must have been because they didn't want me to include prepaid expenses. So guess what? The answer is actually... Oh, this is bad. Isn't this a really bad ratio? 6, 8. So I'm assuming C was the answer they're looking for. So yay! Thank you. Okay. Well, at least they know that. Do cash, marketable securities, and net receivables in the as to test ratio. Cash ratio is cash plus marketable securities. Do not include net receivables. Sales to working capital is sales to average working capital. Oh, funny. Yay. I might take pictures of the ratios. So, are there any other ratios that we need to know? Can't be bothered. Okay. Chapter 7. They actually had more ratios. Chapter 7. I love these complicated equations. Times interest earned is recurring earnings excluding interest expense, tax expense, equity earnings, and non-controlling interest. And then divide by interest expense, including capitalized interest. Okay. The fixed charge coverage is the same exact thing except you add interest portion of rentals. So there. Okay. How do you figure out the interest portion of the rental? Dash debt ratio is the total liabilities over total assets. But here's the problem. They include lots of weird things in total liabilities. What are we supposed to include in total liabilities? Tell me what to include. The test better say you're supposed to include this, this, and this in total liabilities. They better say it, because there's a million different ways you could do it. So dang you. Okay, where is it? They're like, here we go. Here's all the list of things that they may include or not include. They consider deferred income tax and deferred taxes. That's the same thing, you idiot. And they also include redeemable preferred stock. I can't even remember what the actual crap a redeemable preferred stock is. Oh, by the way, I don't think they explained it. I remember reading chapter 3. They didn't really explain it very well at all. They kind of just skipped the definition of it and just talked about the... Please, just... Redeemable preferred stock. Okay. Their stupid explanation of redeemable preferred stock is stupid. It says, redeemable preferred stock is subject to mandatory redemption requirements or has a redemption feature outside the control of the issuer. Wait, if you have redeemable preferred stock, does that mean that basically they could just at any time ask for their money back? Is that what that means? They don't really explain what that means. But does that mean that somebody gives you buys some stock and then they can at any time sell the stock back to you? Like, I don't know. Well, not sell it back, but basically But basically they just say that redeemable preferred stock should be so basically it's part of total liabilities. Okay, fine. Anyways, if the test doesn't tell us how to calculate total liabilities and there's an ambiguity as to how to calculate it, then that's unfair. So dang it. And then debt to equity, and then debt to tangible net worth is same as debt to equity, except you subtract intangible assets. Okay. So those are the basic ratios. I'm probably only going to need to study them for a few minutes because they're actually pretty intuitive and I've learned a lot of them before. But I will still study them, so we'll take some pictures on my phone and then walk around aimlessly staring at the list of ratios. Okay. I will delete yesterday's cubing session because I didn't get any good solves. Okay. Well, obviously I did cube for an entire hour, so, but anyways, my session basically stayed at 8.5 average. Okay. Now please take a very high quality photo of this thing here. Oh no, I have to stand up. Actually, I could just put it here. I am literally moving the textbook so I can avoid having to stand up. Can I see? It's not very good quality. I think I need the light to shine on it. Sorry. Good quality picture. Oh no, the stinking shadow. No, not the shadow. You are not gonna be a shadow on the tap. Come on. Stinking. I'm tapping. Do you want me to just. You want. I don't care. I'm just taking a photo. Okay, fine. I'll just spin it. Is that better? That was a terrible photo. Let's see. The lighting kind of sucks, but it's the best I'm probably going to get, so it's fine. I can still read it. It's just a little bit harder to read. And the second one will be easier because there's less ratios here. And the stupid shadow is still being stupid. And the stupid light is being stupid. What's the... Okay, now that we've scanned the ratios that are in Chapter 6 and 7, I will now look at them for 2 or 3. Oh, sorry. Okay. This kind of sucks. Times interest earned. Times interest earned is recurring earnings. Excluding interest expense, tax expense, equity earnings, and non-controlling interest. Divided by interest expense, including capitalized interest. Fixed charge coverage is the same thing as times interest earned, except you add interest portion of rentals in both the numerator and the denominator. So, yeah, I'm pretty sure I understand those pretty well. Debt ratio, total liabilities to total assets. Debt to equity ratio is total liabilities to shareholders' equity. And the debt to tangible net worth ratio is the total liabilities divided by the shareholders' equity minus intangible assets. That's pretty straightforward. I feel like I get all these already, so this. Oh, man, that's a bad quality photo. Okay. Man. Right, days, sales. So there's some weird, stupid thing that they do where they have days, sales, and receivables, days, sales, and inventory. And for those ratios, they use the ending receivables and the ending inventory. And also, by the way, they actually use gross receivables, not net receivables. That's fun. So, accounts receivable turnover is net sales. Use net sales divided by average gross receipts. And then the accounts receivable turnover in days is flip that fraction and then put a 365 in the numerator, except they love to do it a stupid way where they actually do, and the denominator consists of net sales divided by 365, which I guess they think is more intuitive or something, but I guess I took way too many math classes and I just prefer to put 365 in the numerator. It's much easier. Okay. Days sales and inventory is ending inventory divided by cost of goods sold. Divided by 365, and then the inventory turnover is cost of goods sold divided by average inventory. And the inventory turnover in days is the average inventory divided by cost of goods sold divided by 365. Yep. Oh no. Oh, that hair I saw on my phone is actually part of the photo. It's not on my phone. Oh man. Okay, and then the operating cycle is something that I didn't know about on the phone, but it's pretty intuitive. It's the it's accounts current receivable turnover in days plus inventory turnover in days. Okay. Working capital is current assets minus current liabilities. Current ratio of current assets over current liabilities, asset test ratio. Something that I got wrong on this stupid quiz. Because I don't know did we even talk about the book's definition of acid test ratio? Actually, guess what? This quiz used two different definitions of acid test ratio in two different questions. That is bullcrap. That is such bullcrap. In one question, they did current assets minus inventory, and in another question, they did cash plus marketable securities plus net receivables. That is such bullcrap. There's no way anybody would have gotten both of those questions right. Huh. Wow, man. Are you kidding? Are you kidding? Oh, there's somebody walking by outside. And it's probably very easy to hear through my window because it's a stinking air conditioning unit. And there's like a gap in the stinking window. Oh, okay. Anyways. For acid test ratio, they do cash plus marketable securities plus net receivables. And the cash ratio is only cash plus marketable securities over current liabilities. Sales to working capital is something that is new to me, but it's very self-explanatory except for the fact that you use average working capital instead of just working capital. Okay. So I think that's all I need to do for ratios. I don't know why I was that. There were more ratios, but I'm just going to hope he doesn't include more on the test. Because the ones that were included in the summary are the main ones. Okay. Oh, I get. Okay, so guess what? In this question, it wouldn't have mattered whether you did cash plus marketable securities plus accounts receivable divided by current liabilities, or if you did all current assets minus inventory, because they're the same thing. It just so happens they're the same thing in this question. Okay. Current. I know what a working capital is. Okay, so days in inventory. Guess what, dude? Guess what, dude? Guess what, dude? They have two different ratios. One of them is called days sales. Days sales, and inventory. One of them is called inventory turnover in days. So let's see, did they allow us to have two different ways of doing the question? The way they would have had to do that is if they had average inventories. So let's see. They did give us the option to do average inventory, but they called it days in inventory, which is more similar to the ratio that says ending inventory. But I did the average because I thought that's what you were supposed to do, and I got the question right. So this is bullcrap. 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 You could have done the question either way. Gosh dang it. What is the average collection period? Guess what, buddy? The way they call it in the textbook is actually accounts receivable. They call it accounts receivable turnover in days, not average collection period, so dang you. He didn't give us a list of ratios with those alternative names, so dang. And what about this one? Guess what? Earnings per share? Did they say anything about preferred stock? They actually did tell you what the earnings per share was, but they didn't put it in the summary of the chapter. Earnings per share is net income minus preferred stock divided by average number of common shares. Is it just net income in total? I think it is. I use the net income. I don't think par value is irrelevant to the question. Oh. Okay, do they give you... This was a weird question, but I did end up getting it right. I used the net income. The average number of common shares outstanding. How do you determine that? So the way I determined it was here's the number, here's the average, here's the Do you do 360,000 divided by 4, and that's how many common shares of common stock there are? I think that's how it is. There's 90,000 shares, so you do 24,100 divided by 90,000, and you get 26.7, which is 27, which is C. Okay, I got it. But that's a weird question. A liquidity ratio measures the short-term ability of the company to pay its maturing obligations and to meet unexpected needs for cash. Well, looks like we're studying quizzes. I bet I'm not going to be able to answer one of the quiz questions still. I should be able to answer that. I'm not even going to try to just do it this time. Current asset should include work in process inventory. Kind of a weird question. Okay, I had no freaking idea how to answer this question before. Oh no, actually this is not the one I was confused on. I think I know about this. Okay, if a parent has some control over a subsidiary, but the subsidiary is not consolidated, the subsidiary is accounted for as an investment. I got it wrong because I didn't read the chapter before taking the quiz, which was such a stupid thing to do. Okay? What is not a proper use of notice? to correct an improper financial statement presentation. And this one, again, I got wrong because I didn't read the textbook. Redeemable preferred stock is best classified as C, a long-term debt. Okay. And 6, which of the following is not true related to treasury stock. Okay. Treasury stock is not an increase in paid capital, it's actually an decrease. Or actually, it's whatever. So treasury stock lowers stock outstanding. It may be recorded at the cost of the stock. It may be recorded at par stated value. Okay, got that quiz done. Now quiz 4. Funny, there was no quiz 2. There was only quiz 1, 3, and 4. And there was one question on this quiz that I didn't know how to answer, and I sent a message to the professor asking him how to do it, and he never responded. So yeah. When a company discontinues and disposes of a component segment of its operations, the gain or loss from the disposal should be reported as a special item after continuing operations and before extraordinary. Oh yeah, this was the quiz where it was a take-home quiz. If disposal of a segment meets the criteria of disposal of a segment, then the results of operations in the segment will be reported in conjunction with the gains on disposal. If the firm consolidates subsidiaries that are not wholly owned, an income statement item is created that is through the minority share of earnings. Guess what, buddy? It's not that anymore. Why do they have to do that? It's called non-controlling interest, isn't it? Dang it. Payment of a cash dividend previously. And this is stupid. I don't think I'm going to be able to answer this type of question if it appears on the test. Oh. Is this quiz over chapter 3? Stock dividend is what we're trying to look at here. I apparently don't know how stock dividends work, even after reading the textbook and asking the professor, and he didn't. Where is it? Where the heck is it? I remember it was on the left side of the page. I can't freaking find stock dividend. Dang it! Come on. Ugh, where is it? I thought this quiz was over chapter 3. Is this over chapter 3? Oh, I think it's over chapter 4. Not chapter 3. What? Wait. Common stock. Why can't I find it? Why? I thought it was in chapter 3. Hey. Okay, chapter 4. Why would it be in chapter 4? Oh, it is in chapter 4. What the crap? So the textbook, they barely ever talk about earnings per share. And the one time they talk about it, they only write 3 sentences. They're like, for now, just use the net income divided by outstanding shares of common stock. Okay. Okay, now how do you do a stock dividend? Dang it. I followed the directions exactly how I was supposed to do it, and I still got the question wrong. They said the answer was E. It says you're supposed to reduce retained earnings by 1.5 million. %10 stock dividend. It's very, very clear in this textbook. It says, multiply the par value of the stock by the number of additional shares. Not the total amount of shares, but the number of additional shares. Guess what? The number of additional shares is 100,000. It's 500,000. Where the heck did they get the number of that? 15 times. Did they do 15 times 100,000? Oh my god. They did. They did 15 times 100,000. Which is not right. It says you use the par value. Guess what, buddy? This is totally incorrect. They did this wrong. The textbook clearly says that you multiply the par value, not the market value. They multiplied the market value. So there's no way I should have gotten that wrong. Okay, number 6. I'm going to do it my way on the test. And if I still get it wrong, then, well, screw me, because I'm probably not even going to message the professor. I didn't even message that one professor about getting a 76% on that one test. So if I get that one single question, I'm probably not going to message him. So yay! I just love getting screwed over with stuff. Andromeda Industries. Okay, stock splits are so confusing. What happens when you do stock splits? Stock splits is basically it reduces the market value of stocks. So if you have a 2-for-1 stock split, then that means every person gets one. Instead of having one stock, they now have 2. It increases the shares of stock. So if it's 2 for 1, or if it's 3 for 1, you multiply it by 3, and that's how many you have. You have more stocks. So what this affects where the heck do they talk about whether it affects retained earnings? Where does it talk about retained earnings? I remember seeing an exact quote. Oh. The only thing that changes is the number of shares, the par value. The thing that doesn't change is retained earnings. Additional paid capital or capital stock. Hey. Very simple stuff here. Unusual or infrequent item is not disclosed net of tax. What? Where is it? Where is it? Where is it? They say that unusual or infrequent item is not disclosed net of tax. Guess I'll study my stinking homework, except for case 1-1. Homework for chapter 2. Wait, we had a homework assignment for chapter 2? What was chapter 2? Oh my god. That was all we had to do? That is the simplest thing of all time. I love how they use different words. So earned capital and contributed capital. That's so incredibly simple. I don't even know why I was always understanding. So anyways, now what? Homework of chapter 3. Chapter 3 was balance sheet. I remember rushing to complete this thing on time. So what was this? So, wow, this was a fun stinking assignment. Oh man. Investments are assets. Long-term investment in bonds is an asset. And then we have liabilities. And then bonds payable, less discount on bonds payable. Notes payable long term. Owner's equity, common stock, premium and common stock. Retained earnings. Treasury stock you subtract from the retained earnings. Okay. Wait, you would think treasury stock. For some reason, what they do, they put treasury stock underneath retained earnings. Oh, this is a stinking IFRS consolidated balance sheet. Not the same thing. For this regular one, we have equity. They put it right underneath retained earnings. Weird. Okay. And they put in parentheses bonds. Okay. Simple. Okay, done. Homework chapter 4. I did that one recently. Oh my gosh. Okay, so he took off some points because I didn't put a heading for income statement. That's fun. Okay, so I did everything else right because I got sales minus cost of goods sold equals gross profit minus selling expense and general expense equals operating income minus other income and other expense equals income before taxes. Then you subtract taxes and you get net income from operations, and then you subtract the flood loss and you get net income. Okay. And then the earnings per share is you do net income divided by the number of shares, and then same thing with extraordinary, you do the negative number, divide by that, and then okay, done. I studied all the homework, I studied all the quizzes. Then there's the announcements with problem. I think instead I'm going to look through this, look at math questions. Starting with chapter 5 or 6. I don't think there's any math in chapter 5. Vertical analysis. Well, what's the difference between vertical and horizontal? Vertical. Here's what you do. A vertical one, you divide every single thing by this net sales or total assets, I think. Those are the two things you divide everything by. Yeah, but what about so for income statement, for vertical analysis, divide everything by the net sales. And then for horizontal, divide everything by the previous year's number, I guess. So okay. Okay. I guess that was like one of the few useful things. Chapter 5. That chapter 5 was so weird. Alright. What are we doing here? So net sales here was I know how to do that. Say remember to use gross receivables. Where's the LIFO and FIFO thing? Because that was the one random math thing that was in the summary. Ah, inventories. Yeah. I mean, it's pretty self-explanatory. Like FIFO, first in is first out. The first one bought is the first one sold. But I think the weird thing was like using the lower of net. I think I might not have to study this English. Okay, but let me just look at it for a little bit. I have lots of time. So look at this. They purchased. They purchased the number of units, the cost per unit, and the inventory cost of each thing is this, and this. Then, so then the cost of goods sold is so where are they getting these numbers here, folks? They got some random number 16,700. Where's that? Oh, they're looking at this. They're looking at this. Wait, what? What? Wait, hold on. How does this relate to this? Hold on a second. What are they doing right now? Oh, I see. They put it in reverse order? What are you doing, dude? Maybe they did that on purpose because it's FIFO. What the heck? What? What is going on here? They do something very weird. So they don't do it the same way. They do an actually much more efficient method. Okay. They do a very efficient method for FIFO, for calculate these calculations. Oh my god, this textbook is so weird. I literally do not get their explanation of FIFO and LIFO. I seriously don't get it. What? What is going on here? I guess it was because I was missing some information. I didn't read the whole thing. They have 800 units on hand. There were 2,100 units available during the year, and 800 remains, therefore 1,300 units were sold. So what they did for FIFO was they took the inventory cost of the latest 3. Okay, so what they did was, I see what they did. Okay. So they took the last 800 units that were purchased. They took the last 800 units that were purchased, calculated their cost, then subtracted that cost from the total cost of all the units purchased during the year. Okay, and then for LIFO, they took the first 800 units that were purchased or available, their cost, subtracted that cost from the total cost. Okay. So, okay. And then for average cost, the weighted average. Weighted average, they take the total cost divided by the total units. Wait, what are they doing? So they have the average cost per unit, then they multiply the average cost per unit by the inventory quantity. Wait, that's so simple. What the heck? And the cost of goods sold is found by subtracting the inventory cost from the cost of goods available for sale. Okay. So they do total cost divided by total units is average cost per unit, multiply the average cost per unit times ending inventory, and then subtract that from the total cost of goods sold. And you get the cost of goods sold. Okay, that's fine. I think that was the only other math thing I wanted to look at. I don't think there was anything else really. I don't remember what else I wanted to look at. Man, I should have made note. Come on, come on, man. What are you doing? What am I doing? Why didn't I write down the stuff I wanted to do? Come on, man. I'll do that next time. But that's the only thing I can remember off the top of my head. Were there any calculations from the first 4 chapters that I need to study more? I don't know. Look at chapter 7, and I'll probably be done after this. It's kind of weird. Dad texted me just now, but oh, here we go. Oh wait, actually I don't have time because Chloe has to work. Oh, I might have to go do something. Well, I'm almost done studying anyways. I probably should have done more studying. I should have done actual math questions instead of just looking at how to do it. I don't know what else I was thinking. Like, oh, I'm going to study all the math stuff. Well, guess what? All I had to really study was the LIFO and FIFO calculation, and then everything else was just ratios. So I don't know what else I was supposed to study. Seriously. Yeah, that's basically it. Watch me fail this test. Watch me fail. Watch me. Oh. Maybe I'll just go.